Welcome back. Good to stay with us. Now we'll review select interim dividend paying companies. We'll start with Zenith, and from Zenith we'll move on to GTCO. From GTCO we'll move on to Access Corporation, from there to UB, and of course we have some other industries. We have another industry that we'll review, but that'll be coming up later. Let's start with the Zenith Bank. So for Zenith Bank, we'll be looking at 5 years, 2017, 2018, 2019, 2020, 2021, and then we'll look at their earning per share for the second quarter, because that's our focus. We're focusing on the second quarter, okay? And then after that, we'll look at the dividend, what they paid out in these years, and then we'll project. We'll look at, okay, what should we expect in second quarter 2022? And of course, we already talked about the fact that the results will probably be ready by July, August, thereabouts. That's where we'll get to see some of these 2022 Q2 results. So we're just projecting. We're looking at, okay, from the foregoing, what should we expect? And of course, I still have with me Ambrose Amodion. Thank you.
Thank you.
All right, and of course, we still have Chuksubiri.
Yeah.
And joining virtually, we have Olumuyiwa Adeyemi and Rotimi Olubi. So let's start with Zenith Bank now. In the year 2017, for Q2 earning per share, it was 2 naira 40 kobo. And then for 2018, it was 2 naira 60 kobo. For 2019, it was 3 naira 31 kobo. And for 2020, it was 3 naira 38 kobo. Finally, in 2021, it was 3 naira 38 kobo. And then looking at the dividend, 25 kobo in 2017. In 2018, 30 kobo. In 2019, 30 kobo. It maintained that even in 2020 and 2021. Now, I'd like Ambrose to react to Zenith Bank, you know, their result, the EPS and dividend.
Actually, you just said the interim dividend environment of paying company comes at a quarterly level. Now we have seen the end of the half year. We expect that this dividend will come in the second half. But because the numbers of companies that are into dividend paying are not much in the market, impact is not felt as end of the year dividend paying period. But the good thing is that these companies that pay dividend, they help investors
make decisions.
To manage their portfolio. Because if you're already in this company that declare dividend, most income investors and long-term investors are not ready to sell this company out until they get the final dividend. That is why you can see most of these companies that have interim dividend paying policies, their price are more stable than others that goes up and down. Because these policies also help them. That's why since 2 years ago, a year ago now, when Stapler decided to say, oh, we're paying quarterly dividend to our shareholders, because that stock remains stable in terms of price performance. Also, adding to the positive news in that oil and gas sector all over the world, you can see the stability there. But for the banking sector, for me, people will say, oh, banking performance have not been too encouraging. I believe, before now, all the returns in banking sector has been below the inflation, and that's why people are not looking that way of a banking sector, because their returns both in capital appreciation or even in dividend, most of them are still below the inflation figure. For that, people are not looking there. But I believe that with the recent adjustment in NPR, that will be a plus for the banking sector. It will reflect in the first half of the year, but in the second half of the year, I see that there will be improvement in the banking sector performance, because yes, there will be cost of fund, but improvement in what we call interest margin also reflect on their bottom line at the end of the day, because banks are there to create money, and when there is high interest rate, they create more money. Because I remember when I was in secondary school doing economics, they say bank creates money. We wonder how bank creates money. Bank creates money through their interest, and when interest is up now, it's going to give a lot of return to them, but there will also be high cost of fund, but they were able to net it out at the end of the day, have a better bottom line. But for Zenith Bank, this is a bank that have been consistent in dividend payouts.
And even their earning per share keeps increasing by the year.
No, I'm coming now. Okay. Why I say so? Consistently growing their earnings on quarterly and yearly basis. For the past 22 years, I'll tell you, this is what I'll give to Zenith Bank. Even when the market is not looking that way because they are not paying dividend, yearly yearly they grow their earnings. That is a good thing, that the bank has remained almost like for the past 7 years now, the most profitable banks in Nigeria in terms of performance. And also their payment has also been impressive. That is why I see, when GT performance started going down, you see that most people quickly move to Zenith Bank, because they've seen, oh, yes, there might not be more, return much, but because earnings are consistent, we can edge against. So that's why I see more increased activity. The bank stock started almost 28, 29 before coming down to where adjustment on those market volatility. But I believe that on the strength of Zenith Bank consistent, we expect that Zenith Bank also pay 30 kobo or make it 32 or 35.
They should make it 35.
35. Good, but it's possible. But that bank too, because when the economy is recovering, and you can see that our GDP has not really done badly, because if you look at, that's why there was a slowdown between Q4 2021 and Q1 2022. We see that we're still in a recovery mode. Compared to Q1 2022 or 22 to 2021, you can see that it's a great hood from 0.4% in 2021 first quarter and 3.11 in 2022 first quarter. Then if you compare to the previous quarter, there's a slowdown. But I believe that Zenith Bank has the potential to sustain the payout, and that means investors in Zenith Bank should not panic to sell out. Rather, they put back the Zenith Bank should opportunity for you to get more. I call it what called Naira average investing. When you start coming back, become more cheaper, you get more units, and that much will be called more dividend at the end of the day. Knowing that this bank will pay you interim and full year. If you're entering now, there's no need to panic to go out before that. I also, if the Q3 come and it's positive, as I said, we don't expect the increase in rate to inflate the bank performance for the past half year. But in the new year, we expect that from Q3 we start seeing, because it was done around May, and they try to kind of renegotiate their loan with their clients, their customers. I believe that from Q3 we start seeing element, but at the end of the full year we'll see improved interest margin for the banks. All
right, thank you. Rotimi, if you can hear me, we'd like you to comment on this. Okay, I guess we don't have Rotimi here, and we also do not have Olumiwa. For Olumiwa, I had to go attend to something urgently, and then for Rotimi, of course, I guess something came up. But if they are able to, they will definitely join us before the end of the show.
No problem at all.
Okay, so let's look at GTCO. Before we look at GTCO, I would really like the Forex man, Took Sobiri, to talk to us. Beg your pardon. I would really like you to talk to us about the Forex. How do we solve the Forex problem? Let's start from there. And what impact is this going to have on the earnings?
Okay, so if I get you correctly, as per the earnings, okay. Now, first question you asked is, how do we solve the Forex problem?
Yes, because it's been a challenge for industries, for companies, and all of that.
Okay, so I think your question becomes more clearer now. When you say it's become a challenge for most companies. Now, I think the major problem that we are facing right now is accessibility to foreign exchange.
Yes.
Okay, and I would say so far so good. It is glaring, if I can use that word, that the central bank policies have not really been helping the economy or helping companies have accessibility to foreign exchange. And because of this, we're seeing on a daily, increase in the exchange rate, in the parallel market, okay, and which is actually affecting or bordering down on the profitability of these companies in the long run eventually. And one way or the other, while we were having this discussion earlier on, okay, we are seeing it filter into, companies are set up to make profit. So one way or the other, they just have to pass this extra cost back to the consumers, one way or the other. Okay, so I think the central bank just has to find a way, okay? Yeah, has to find a way out.
But talking about the central bank is trying to, solve this through the I&E window. That's the import and export. But unfortunately, that's having a dip on the foreign reserve. So what exactly, are there other, maybe some fiscal policies or something else that can actually help us really? What do we have to do? Bearing in mind that some persons are talking about harmonization of the exchange rate so that we have a single exchange rate and all of that. What's your thoughts on all that?
Okay, so now the idea behind the harmonization of the exchange rate, would actually make a lot of sense, okay, if it is feasible. Okay, so the question now is, what is the possibility of harmonizing the exchange rate from the part of the central bank? That's the question. Okay, so if we are not finding ways of generating income, okay, from foreign income, okay, to increase the foreign reserve, then how do we increase the supply of
currency? Yeah, we are not attracting no foreign.
Okay, so basically that's the major issue. Okay,
and some are
so
saying
until we find a way of attracting a lot of foreign investors, like you are saying, security issue. Okay, so the question now is this: confidence, investor confidence, okay, has to be increased. Okay, and we know what's happening on a daily. Even we, the citizens, are not too comfortable
with the environment.
I mean, with the environment, not to talk of foreigners. Okay, so I remember some time back, I had some foreign visitors, and they didn't want to go past the Keja, especially in their hotel, because they've had a lot of information on insecurity, how people get kidnapped and all of that. Okay, so these are investors who wants to come to invest in the country. So if, against all odds, they take that confidence, as in they take that step, that bold step to come to Nigeria, but at the same time they refuse to step out of their comfort zone, then what happens to others?
Yeah.
Others who want to come in. So basically that's a challenge on its own. So if foreign investors' confidence, okay, is not heightened, is not increased, if all this, what will I call it now, is it kidnappings, bombings and all of this, if it's not curtailed, how will people have confidence to come to invest in our economy? Okay, so that is a major issue ordinarily. So investor confidence is threatened. Okay, so it's just the central bank just has to look for a way, okay, of increasing investor confidence. Okay, we also have to look internally of finding ways of creating goods, skills that can actually be exported. Okay, so that we encourage foreign inflows, because if foreign inflows are not encouraged, then accessibility to this to the dollar is actually becomes very difficult. So we'll keep having the same problem.
All right, thank you, Amadion. Just a few words before we move on to GTCO.
Yeah, just like what you just said, that the physical authority should also come up with some policies to encourage kind of investors' confidence, even consumer confidence. All of them have been eroded in Nigeria to speak now. But me, when I saw that the CBN gradually jumped to follow the global trend of increasing rate, because others are increasing rate. If you look at your environment, if you want to attract this foreign investor, because the essence of increasing rate for you to attract foreign investor, but are they confident to come? Now, this pre-election year, and insecurity has been on the rise. Are they coming at this point? I mean, if you really want to encourage the local private sector, you don't need to increase rates, but rather you make funds cheaper for them so they can still be running the economy. But if you are willing to attract foreign investors and that's for increase and they are not coming, at the detriment of the recovering economy, that means you want to deflate the recovery we have seen so far. But I believe that it is time for the fiscal authority and the monetary policy to come together and see where they can do something to make this economy more attractive for foreign investors. Because if you really want to earn more foreign, you need to attract foreign investors in and also encourage local investors also to do things that we can also export. And on the other hand is that because of high the exchange rate, also it is time for Nigerian companies to look inward, what we call backward integration. And most of the sectors have done that backward integration. That is why they are not dependent on. That is why you can see investors that are designing, they're looking at companies that have done backward integration that they are not importing anything that will eat into their profit at the end of the day. If all we're doing is naira, and we are not bringing dollars, importing that will chop your profit at the end of the day, you're going to post a fat earnings. That will also impact it, because I always say that price feed on what? On earnings. If earnings is positive, that dividend will come, payout to be high. But if your earnings is poor, you can't give what you don't have.
Exactly.
That's why for me, I think we should look back inward and encourage that more backward integration. And also let's see sector that now can see that agriculture sector, especially the palm oil, is becoming attractive now. Yes. Now you can see that even government is having interest to start exporting oil so that they can earn their hard currency, the dollars, which is good. That means the companies that are already in that sector that are enjoying this benefit, investors should know where to put their money. These are enough for investors that have designed that. You see a sector that you know that is outstanding, go there and make money for yourself.
Okay, so let's get back to GTCO. For GTCO, we're looking at the earning per share Q2 2017, 18, 19, 20, and 21, and then we'll look at what that should give us in 2022. So for GTCO, the Q2 EPS 2017 3 naira 5 kobo, 2018 3 naira 25 kobo, 2019 3 naira 37 kobo, 2020 3 naira 32 kobo, and 2021 2 naira 78 kobo. But then the dividend remained 30 kobo all through. First, why the depreciation? Why the decline?
Actually, this is what many investors in the market are worried about, that in the last 3 years, GT performance have been on the decline, dwindling down, which is not too good. And also we can see that investor confidence also in GTB is also shaking. What I mean, so that the foreign investor that are major player in GTB, most of them have sold down their position because GT performance, the numbers, the scorecard are not too attractive for them to still hold on. But I believe that as they've gone into a holding company, we're sparing their investment in other sector or other businesses to come at the end of the day. But because at this point we are not seeing number moving in the same direction as before, even though before now, GTB one of the toast of investors in Nigeria, but because of change in management, where they move from from a bank to a holding company, because for me, investors are still watching to see if the numbers will improve. But for me, for those that are also long-term investors, GTB will definitely bounce back.
Okay.
See the price at this, but for me, it's an attractive for long-term investor. But for those that really want to make money, they want to see that until there is a sign that they bounce back in terms of performance, you can jump into GTB. But for now, those that are waiting for dividend can still hold on at around the 20 naira 50 kobo now. It's okay. But those that are thinking long term, but for traders like me, I will not put my money in GTB for now. I wait to see, recovery in terms of any performance, and I see an uptrend. I jump into GTB. But GTB has good business strategy that at the end of the day, you can see that they are going to fintech. That is their area of strength, and they are going to strengthen it. For me, going to the future might see improved number, but for now, I think that for the past 3 years, you can see a decline from 2018. Even their Q1 2022 is not too attractive compared to other banks in that same category of first year. For me, I think they need to sit up and improve their number, but the interim dividend will come 30 kobo, or as you said, 35 kobo.
Do you think it will be up to 35 kobo, looking at the fact that it's been depreciating, except it increases, that's the earning per share?
Do you know that the company, some companies have what we call a equalizing dividend policy? That means they don't go down what they are paid before. That means even though their numbers are not good, they did what we call equalization policy. They want to maintain that.
I would have thought they would just stay with 30 kobo.
They might maintain that. That equalization dividend paying policy applies in different companies at different times. Now that they have been paying 30 kobo, I know that they can't go below 30 kobo. Once they go below 30 kobo, to send a bad signal.
Very bad one. All right, let's look at Access. Access is a stock that I know you talk very fondly about. Yes, I remember we've had several conversations about Access. So very quickly, we're looking at it in the same manner, 2017 to 2021, and then we're projecting for 2022. So for Q2, the EPS in 2017 was 1 naira 36 kobo. In 2018, 1 naira 37 kobo. In 2019, 1 naira 77 kobo. In 2020, 1 naira 73 kobo, and in 2021, 2 naira 45 kobo. We see it increasing. And then for dividend, 2017, 20 kobo. 2018, 25 kobo. 2019, 25 kobo, 2020, 25 kobo, and then 2021, 25 kobo. Talk to us about Access.
Yeah, actually, I would say that the last figure of 2021, I think that should be a mistake. They increased their payout last year to 30 kobo for Access. What I said, so Access has come to challenge the first year banks now. Now even overtook them in terms of it's ahead of all these first year banks in terms of gross earnings. That means Access can see the impact of their strategy. Like we were saying before now, that different banks in Nigeria have different strategy to expand. Access have taken acquisition and merger of moving forward. While Zenith Bank and GTB have been on organic growth, but now because Access continue to expand, not only in Nigeria, across Africa, and that is where you see a company or a bank going outside Nigeria tells that they're taking advantage of this new agreement that Africa Trade Free Zone.
FCTA.
If that has come to stay, I think it's now done on Nigerian companies to expand the operation, even though produce the product that can go beyond Nigeria. Because if your product is world standard, you can sell anywhere in the world. But for Access Bank, they're opening branches anywhere in Africa. That is a plus for them. That is their own strategy. You can see that as we speak now, the gross earnings of Access has taken over all the banks in Nigeria. They are now leading in gross earnings, even as at Q1. And they tell us that if that is maintained and going to the future, once they slow down in the acquisition, the bottom line will come up. Zenith Bank is the leading bank in terms of profitability because their bottom line is still very very robust. But once Access comes to that level again, Access will take over the banking sector as a leader, and that is where they are heading to. That is their plan, and that is their target. And you know that the guys in Access Bank are not dull moment guys, and I believe that numbers will soon come very soon. That's why any investor in Access Bank, I will encourage you hold your position for medium and for long term, because we are seeing the way the bank is going. At the end of the day, to be win-win for investors. I said earlier that last year they moved from 25 kobo to join the big boys 30 kobo into dividend. So that means this year investors will not spend less than 30 kobo. Even it's possible that they make it 35 kobo.
Okay. Very quickly, let's have your thoughts before we move on to the other one.
In terms of earnings?
Yeah.
Okay, so I'll just be very honest. That's not really my turf. Okay, so I really don't have much to say there.
Okay, that's right. That's okay. All right, very quickly, let's look at UBA. I think it's quite instructive what you said about Access and Zenith. Okay, that's quite instructive. And for what you said about GTCO, investors are listening, and so.
I know. I had the prospect for GT, but I didn't say anything more.
Is it for the long term? For the long term, the prospects are still there.
Yeah.
Okay. All right, so for UBA, the same thing applies. 2017 to 2021, Q2 earning per share. 1 naira 24 kobo, 2018 1 naira 28 kobo, 2019 1 naira 66 kobo, 2020 1 naira 30 kobo, 2021 1 naira 72 kobo. And then when we look at the dividend, 2017 20 kobo, 2018 20 kobo, 2019 20 kobo, 2020 17 kobo, and then in 2021 20 kobo. Okay, very quickly, when we look at the earning per share between 2020 and 2019, there is a decline, after which it went back. And then when we look at the dividend between 2020 and 2021, there is a decline, which sometimes we call it pullback. That's for
Yes.
That's for Friday.
That's for, yeah. I know. Oh goodness. Okay, so talk to us about this.
For UBA, for me, UBA has come to stay. This is one of the oldest banks in the market. Well, I remember when I was in primary school, say UBA, there was a song attached to that when I was in primary school. But know that since the Standard Bank and the UBA merge, there's kind of a transformation in that bank, and you can see the part of Elumelu and his team in the bank. I believe that the bank has also, because of that Africa spread, as we speak now, about 40% of UBA earnings come from outside Nigeria, which is good for them. That means if there's any shake in Nigeria, it won't affect UBA much. Also, if you look at UBA operation in Nigeria, really go to UBA, you can't see much activity the way you see in Zenith Bank. But at the end of the day, you are seeing a better number, which also they're trying to also bring that back to Nigeria, that let them have that kind of a business strategy also in Nigeria. If that is done, we expect that UBA bouncing back. The year they pay the 17 kobo was the year, so there was a decline of 130 kobo, which the dividend also declined. But you can see the previous year, 2021, they bounced back to 20 kobo, and even their full year was almost 1 naira. For me, it's a good one for UBA. We need UBA can sustain this performance also in their Q1, and I believe that Q2 for 2022 will be also positive. That will also, investors should not expect less than 20 kobo, even 25 kobo from UBA on the entry dividend, because actually, when you pay out dividend to your investor, it's another way of giving them confidence that the bank is well run. Because if you see anywhere in the world where a bank is not paying dividend, many market players, investors will always do that. That means for you not to pay dividend, something is wrong. Even though it's a growth stock, especially when it comes to financial sector, if you're not paying dividend, it's a sign of weakness. That is why every banks in Nigeria want to grow their dividend gradually to show that we are still there, we are making money.
True. Okay, now before we go to consumer goods, because we're looking at two of them, Nestle and then we have Nigeria Breweries, I'd like you to talk about this interim dividend. Why is it that, I mean, of all the number of stocks we have that are listed, companies that are listed, 186, only just about less than 20 of them pay interim dividend. What's happening there?
For me, it's a policy of individual company, how you want to run your company, and also how you want to reward your shareholders or your investor. It is not a fault that you must pay interim dividend.
Yeah, let's look at the implication of paying interim dividend for people that are paying. What's the implication?
For me, it's a way of managing your price stability, because once you're paying dividend, long-term investor will not want to go in and go out, but trader like us can go in and buy. Long-term investor that collected your interim dividend, see that your number is moving in that positive direction, not what they want to stay and collect the final, because most Nigerian trade dividends are small. For that is why interim dividend period you don't see much volume activities with them, but at the end of the year where they are paying, which you see market reacting to that. But when you see the performance and half year within today, it will give you an insight what the end of the year will look like. Because that in Nigeria now we have about let me mention them now quickly. We have GTB, Zenith Bank, Access, UBA, Stanbic IBTC. We have NESTLE. We have Total in the oil sector. We have the Steplat in the oil sector. We have Okomi in the agro sector. There's Presco and the Waku just came in newly last year. This is their first time. We'll see that whether they will sustain it the second year, which is 2022. But I believe that their numbers will solve for Q1. If Q2 maintain that trend, the two of them should also pay trade dividend. But it's a good way of also Presco and WACO to manage their price. And WACO price that remains stable around 26 naira, even the oscillation, the up and down, pulling back, correction, profit taking in the market and that stuff. It didn't go below 26 naira before to have gone back around there, even 20, 21, 19. But because of that dividend, many people are looking at, oh, dividend will come from WACO, let's wait for the dividend. And it's a company that also last year did about 3 naira, 11 kobo earning per share, and they paid 2 naira. It's fantastic. Out of 3 naira, they're giving 2 naira. It's a good one. If that is maintained this year, we'll see more value for WACO, even also for Presco. But for others, also they want to maintain that trend. I believe that the first quarter of Stanbic was positive. For NESTLE, as you just mentioned, NESTLE and the Nigeria Brewery, they are consistent because these are the consumer goods that.
Okay, before you go to NESTLE and Nigeria Breweries, I think it's important to let our audience see what it looks like. So, same applies 2017 to 2021. Q2 earning per share for NESTLE, we have 20 naira 88 kobo. 2018, 27 naira 7 kobo. 2019, 33 naira 11 kobo. For 2020, 27 naira 53 kobo. And then for 2021, 27 naira 42 kobo. And then for dividend, they paid 20 naira 2017. In 2018, 20 naira. In 2019, 25 naira. In 2020, 25 naira. And in 2021, 25 naira. This is a stock I'd like to talk about.
Why? Because the consumer goods. The only thing that I will talk more of on the stock is that the shareholding structure is tight. You know, when you see the shareholding tight, prices are not likely to go down. Foreign investors are about 68% of NESTLE, and this is NESTLE Switzerland, and then ready to sell. NESTLE Switzerland and NESTLE Ghana has about this 68% in Nigeria holding, and ready to sell. And that is why since 2 years now, they've been acquiring this stock on the floor. That means for me, it's this kind of fear. If by the end of the day they are making it 80% holding, they can start to go out to Nigeria in the next few. That is why regulators also should watch, because the way they are acquiring this stock says that they have interest, and they don't. I mean, it's a sign that they have confidence in Nigerian economy. Let's be sincere. That have confidence, and that's why they are acquiring to make the board. Another one, I don't know that if tomorrow they make 80% of the population, they say, oh, we want to buy the 20% for minority shareholder who are not going to be on the exchange again. And the price have been stable because of their performance. And for me, these are the areas, regulators should also be asking questions. They'll be asking questions because the way the majority is acquiring every day, you see them notifying the market of insider dealing. They are the one buying. What are you saying? Like I just said earlier, it's a sign of what confidence in the economy.
That's one. But on the other hand, you never can tell.
Exactly. That is it for.
Okay, now you just scared me. I mean, I was happy before, but with this, I'm scared.
No. Insider dealing is expected anywhere in the world. So far,
yes, that fear of being delisted or buying out the minority shareholders, that's the fear I'm talking about here.
It's possible, but the way they are going, unless they come out tomorrow and tell us, but I tell you, when you're having 80% of any company, you decide whether to buy everybody or you want to go. Nobody will force you to say, oh, this guy, I will pay you, even though you sell it for 1,400. Say, oh, let me pay my shareholder 2,000 naira. And there are many Nigerians that will jump and say, oh, let me have it.
Yeah.
And when they have it, that is where you are cleaning out your mouth from the company.
Oh, no. All right, finally, Nigeria Breweries will try to be fast with this one. 2017 to 2021, and then earning per share in 2017, 2 naira 97 kobo. In 2018, 2 naira 31 kobo. In 2019, 1 naira 66 kobo. Now let's look at 2020, 70 kobo, and then in 2021, 97 kobo. That's a lot of depreciation there. And then for dividend, 1 naira, that was in 2017. In 2018, 78 kobo. In 2019, 50 kobo. In 2020, 25 kobo. And in 2021, 25 kobo.
Yeah, unfortunately, I don't discuss Nigeria Brewery anywhere I'm talking about stock markets. I will say let the numbers speak for itself. Thank you. The number of people itself.
Oh my God.
Oh no, investors would not be happy to hear this. This is why analyst hangout is here.
Yeah, I think the numbers are very obvious for you to.
I just said something about the numbers.
The numbers are very obvious.
I want to hear you say something.
I don't want to say buy or sell.
It's actually surprising.
I don't want to say buy and sell. Or let's say that let the numbers work and see the improvement in their Q1, and also let's see what happen in Q2. We'll see good performance for even in Guinness, in International Brewery, in Champion Brewery. But I won't say buy or sell.
Okay, I think we'll leave it there.
Yeah,
You want to say something?
No, I'm just saying, looking at the numbers, for me, it's kind of, I don't know, a bit
Go ahead.
discouraging because I'm seeing a decline. I don't know why we are having that decline, especially for beverages like this, you know. I mean, a lot of people consume this, so I don't know why we are seeing this decline. But
You know, you always talk about maybe it's management issue or it's something, you know.
I said I don't comment on any alcohol-related drinks.
It's all right. Thank you so much for your thoughts on the show. Marcus Omodio, CRO Invest Data Consulting Limited.
Yeah, thanks for having me.
Okay, thank you for coming on the show, Chuks Obiri.
yeah, thank you for
Glad to
having us.
have you. Yes, the FX man.
Yes, so
And of course,
$1 guy.
And of course, virtually, we were joined by Olumuyiwa Adeyemi. Thanks to him, of course, for joining us. And we're also joined by Rotimi Olubi. Many thanks to him for also joining. Well, at this point, we say thank you for joining us and for being a part of the show. Next week, we'll be here again with another interesting and educative episode. Do enjoy the rest of the day. I am Perpetua Fasami Peter. Bye for now.